All right, so welcome to the exchange. So, first and foremost, I'm not a financial advisor. I'm just here to give you my opinion on what I see in the stock markets. Looking to the left to see what has happened, then looking to the right to see what may happen. Do your own due diligence. Make sure you invest money in things you know about. If you don't know, invest in yourself and learn. That's the best way you can make money out here and have some security in these markets. So, let's look at what happens to stock markets so we can get a better idea and some security in exchange. Welcome to the Exchange Show. All right, here we are, another episode of the Exchange. And with this one, we're going to start out with talking about Square. Now, on Square, if you notice, it is almost up to its next earnings, which is going to be on February the 22nd. All right, so that's in a couple of days. With that being said, are we going to come back down to meet earnings down here at $44 or fill this gap here? I'm not sure. I'm not going to lie to you because their earnings may be pretty good. And if they are, well, look at that. So one more gap here. Almost forgot to fill it. So remember, we're in a daily time frame. And here we go. Make sure I put that up there. So at this point, we have two gaps that need to be filled. And generally, let's look back at some of their earnings. The last earnings, they were pretty positive. It created the gap. There's another gap here. Looky, looky. Let's go ahead and put one more here. It's got three gaps below it in the daily time frame that have not been filled. All right, so the previous earnings were positive. It started going up. Our last earnings, let's see here, like they were pretty not good. All right, no, not that one. There we go. And we got from here to here, and it broke down the earnings before that. So that would be on August of 23 and ending on November of 23. So these earnings didn't look like they were too good. They were actually positive, but it sold off. So based on the news, it was probably buying the hype and then selling the real. Now, with that being said, we're looking at this last one. Our last earnings, positive, went up. Now we're waiting on this one. Is it going to continue that? Because right now it looks like we're in a consolidation area now between the area of 61, or is that now? $62 up here to about, there we go, up here to about the $70 range. And at this moment, it looks like we're just bouncing around in here, waiting for the news to happen. If you look, we have some candles that can tell us what. Well, right now, I had a trend. Let's do it this way, just doing some basic markups here. I had a trend that was going up inside this consolidation. I had some breakage of that trend here, and I have a strong bearish candle. It's flat. All the pressure of this candle was selling pressure until the end in the daily. Now, in the weekly, let's see what we got here. Let's see what we got. Because this looks one way in the daily, let's see what it looks like in the weekly. In the weekly, this looks like a pullback. It looks like a pullback. So let's throw out some fib. Let's see if it came down to an area we would like. All right, it's bouncing off the 382. Okay, now generally, this could be a good push to the upside because you have this strong bullish movement here on these candles, all green. Then we had a pullback consolidation. Are we going to have a continuation going up based on earnings? Ooh, that's a good question. But keep your eye open for this one. So what I think is we're probably going to have a push to the upside for Square. I think it's going to come down. Let's see. I think it's going to come down to an area probably here and then push up. There we go. Push up to about here at the $79 range. The reason I'm saying that is because generally it seems like Square wants to go up. It wants to go up. And how else are we going to get up unless we pull back to get those orders that might have been missed? We have an area here in the daily around $58. So say it comes down here to 58 bucks, it may just shoot down real quick, give us a big wick, grab some orders, and then continue up. But let's see. The next one on my list is going to be Oxy, and here we even have a volume profile. So we talked about Oxy on, I want to say, back in January, and let's say it was about around this area. Let's say around here. Well, we're still in this tight consolidation. So it broke out of the consolidation here. All the volumes down here at the bottom where the earnings were. And we are in the daily time frame. We have already hit its previous earnings. We're looking for it to go to 61.60. Now, if this is going to follow true with a lot of the other energy stocks, it may continue up. And let's see where, because it looks like we have a gap over here that is probably going to need to be filled. And that's up in the $64 range to $65 range. So right now that'd be a $5 move on Oxy. So if you're in the options, this may be a good look for you. As you can see, we have a very strong bullish candle here, and then we have a spinning top doji here. Let's see if it has enough to push through that 61.60 area, because this could also be an area that could be known as a supply zone. Because we had a big move push off of here. And if you notice, let me see where you're at. There you are. This candle here came up to the same area and wicked out, and then gave us a strong rejection candle to the downside. So we would need to see Occidental Petroleum close above at least this 61.60 area with a strong bullish move to continue up to that gap that's up here by $64-65. All right. So our next one we're going to talk about is, I want to talk about ARKK, the innovation one. All right. So if you notice here right off the bat, I want to do a call ending in June for about 70 bucks. But right now, this could even be a better entry because it looks like I'm going to get a pullback in the daily time frame. And the reason I say that, I have a very strong bearish candle right here. This bearish candle is going off of a rejection of an area. So I got a flat bearish candle. It's going off of the area around 52 and change. So always remember, even when you draw your levels, you're never doing an exact area. Exact line or exact price. You're doing areas. Now, with that being said, if this continues down, I'm looking for probably here, that $48.18 area or $48 area. I would probably like to start a call going out to June for 70 bucks. And the reason I'm saying that is it's cheap. I'm not gonna lie, I like cheap options because they're easy and affordable. But if you notice, there's also a gap down here at the $41 range. So we broke out of a channel here and we created a nice bullish movement. And now we're getting a pullback. But is it going to be strong enough to go down to this $41 range, or is it just going to come back to this $48 range? That's what we're looking for. So for that, I would like to see a pullback, and I probably would change my strike price if I get a good pullback to a lower area, because I'm pretty sure it's going to be bullish, just like our next ticker, which is going to be IWM. So the reason I'm talking about ARK and IWM is because they're small caps, and these are going to probably run pretty well because they have not done what the larger caps have done, and that's pretty much make all-time highs. They haven't broken them. They haven't broken their all-time highs. So especially since, what is this? This is since 22. March of 22 was our last high. And at this moment, we're just not there. We got 201. We're looking to break 207. All right. Now, with this one, we have a strong bullish candle here. Now, that bullish candle has a small bearish candle inside of it. Now, with that being said, it looks like we can do a nice little bounce up to at least a $207 range for IWM. After we do that, We're looking for, let's see, 207. Let's go in the past. Do I have anything else here? 233. But let's go in the weekly. And the weekly, ooh. Oh yeah, this looks nice. So in the weekly, we have a lot of consolidation over here in this area. That's a lot of buildup. This was a strong distribution. So we had a markup distribution ending with this strong bullish move that ended right here. So the reason I'm now going to put there we go. I'm putting a line there is because that's where we topped out. And it had a lot of orders to start this move. Now we're doing the same thing. We had a mark down. Looks like we had some consolidation, aka we're building up orders. Have we reached the top of the consolidation where we're going to break this 207 and look for this 233, 243? So I don't know. I would like to see that, but it's not about what I like. It's about what I can do. What is the market going to do? Now, in the weekly, you see we have this looks like a bearish candle as well. So this last weekly candle, it could be considered a hammer, but it's not. It has a wick on the top and a longer wick on the bottom. The body is very small, so this could be a bearish candle. It's showing rejection the same area as this candle here. So if you look there, that candle has a very large wick and it was bearish. This one has a wick as well on both sides, but not enough buyers to push it past this $205 zone in the weekly. All right. I don't know about that one. I might have to be patient, wait for a pullback, because if you look even more, let's do a cheat sheet. I got this markup, got a little pullback, some orders getting put in here. I got another quick little push. If this continues down, I would like to see this complete an M pattern. If it completes the M pattern down to this demand zone, then I will probably do some calls to go forward up. And I could change my strike price on that as well. So it's about being patient. So let's talk about one that I'm sure you all want to know about. Let's talk about Tesla. Now on Tesla, you are getting in the weekly. We're now in the weekly. We're filling a gap right now. It's filling up this very big bearish candle that took us all the way down to a low 179. We are now at 199. So you have a $20 difference at this moment. It hasn't met its last earnings. That was between January 24th. Let's go on the daily. And let me get this out the way because we haven't done this yet. Oop, there we go. So our last earnings was on January 24th. We dropped down. We're filling that gap now. But this could be considered a consolidation area. We're building a base up. And now it looks like we're going up. Now, this is another thing you can do. Look here. You got a point, point, point. 3 points, right? So even if you can't pick out patterns, you may be able to pick them out if you just change your graph to a line graph. Here's the thing. Let's do a... Where are you at? I hardly ever use this one. There we go. No, that's not it. There we go. All right. So we have what it looks like to me, and this is just my opinion. If we have an inverted head and shoulders, this could definitely go ahead and push right back up to probably the 230. That's the minimum you could look for. This is probably going to blow right past the 208 because you pretty much know how Tesla moves. It's going to most likely move about $6 to $7 every day. Even if it doesn't go completely straight up, it's most likely going to blow past this because there's probably orders here waiting at this 207 area to go further up. All right, so that's Tesla for me. And let's see. We talked about Oxy. Oh, let's cover one of the, here we go, BITO. So this is one of the ETFs that covers Bitcoin. So here we are. We have two candles not going anywhere. Now, this is in the daily time frame. We have a lot of gaps going up. All right. Are we top of a, we look like we're at the top of a trading range at this moment. We're still inside of this tight area here. So if we're looking at this to go forward, it needs on this next couple of days to shoot up past here and beat and close above what about let's see, $25. If we can do that, we're great. In the weekly, you'll notice that we broke a trend, went right on up. Are we going to be able to continue this? Because it looks like we're at the top of the range. Now, this area here is support in the daily time frame, and it has stayed above it for 2 weeks. It hasn't closed below it. So at this point, is it going to continue up? Because if it doesn't, we're probably going to come back, fill a bunch of these gaps. At least this one down to the $23.84 range. And then from there, we may go up again. So from here, coming down to here, and then continuing up. Continuing up to where? Let's see. Ooh, $29, like my next area of interest. So there we go. That's our episode of Stock Shots for this week. I hope you enjoyed it. We'll see you next week.